What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 7th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we're going to be talking about not only the current state of crypto markets as we pulled back over the last couple of days towards our general support range, but on top of that, we're going to be talking about what could be a major inflation crisis when it comes to the cost of commodities. With the geopolitical tensions ramping up between Ukraine and Russia, and on top of that, the global supply chain still suffering from the effects of the global pandemic in 2022 and 2021, we've got to spend some time to accept the reality that the cost of general commodities, goods, and services may continue to climb higher here in the short term. I'm going to be talking about a couple different scenarios, but let's go ahead and dive right into it. Now, one thing I do want to say, guys, if you're able to tolerate me today, I finally completed my 5th day of water fasting, meaning I haven't eaten in 5 days, and this morning I had a little bit of food as I'm entering into refeeding. So if you guys can bear with me, I think I've got a little bit of a kick more of energy here, but I feel pretty good and I'm happy to get back into the normal swing of things. So anyways, let's go ahead and talk about it. So as you all know, we've had this general kind of outline here drawn that for crypto markets, since back here in December, we'd come down to this around $35,000 range. We've gotten that retest about 2 times here on the lows. And since then, again, we had projected that we'd sometimes come up here in kind of May. Again, we set our target quite wide here, not exactly meant to be on the dot. But again, this idea that it would take a little while to recover here. And it seems to be what crypto markets are doing. We've established these higher lows. Resistance is generally around, although you can maybe make an argument it's slightly higher than the previous ones. I think it's generally around this 44K level where we faced resistance. And we've generally been seeing chop in price. Rallies come up, there's a fade in price, but the lows continue to expand higher. And all the while, I want to actually focus a lot today on what's going on in commodity markets. I just want to go ahead and provide some comfort here. All the while, there is a lot to be, genuinely concerned for, or at least keep an eye on when it comes to the global markets, and accept that there is some uncertainty. I want to make it very clear that so long as we establish those higher lows, as we have been doing in the longer term trend more than over the past year, I think this is going to be a telltale sign that crypto is really separate from most asset markets. There's been a lot of people over the past couple of weeks and months who said, see, we've been seeing a correlation between crypto markets and equity markets, and therefore, if equities are going down, crypto is going to go down. Well, to be honest with you all, first off, there's no guarantee that equities will continue selling off. If you adjust them for the inflation and the actual economy, and/or maybe divide them by a ratio of commodities, maybe they're not performing so well. But generally speaking, I don't think we're going to see some massive divergence away from assets in general. And second off, crypto has been in bull markets and bear markets during the counter opposite of equities, right? So again, it's just important to understand that when it comes to diving into the market here. Now, the one thing I do want to talk about here before we dive into the commodity section of the conversation is talk a little bit about 3 key trend lines and a general price range, if you will, that I'm watching when it comes to the ETH-BTC ratio. ETH against Bitcoin, or the ratio of ETH-BTC, has been one of the clear telltale signs that the market is still confident. The market believes that there is more to give. And we've been seeing a lot of on-chain data that the the whale addresses, I think it's those who are holding, I don't know exactly the amount. It might be the whale, like billionaire addresses, or potentially like the multi-million-dollar holding accounts. We've been seeing on chain that those whales have actually been increasing their position over the past year. They're not distributing onto the market. They're not selling off their assets. They're still betting long-term on Ethereum, the merge, and all the upcoming upgrades with ETH2. So considering that, one of the things that I think is really important to watch is observing, as a naked trader would, no worries, you don't have to take off your clothes, as a naked trader would, is by simply looking at support and resistance. And we can see here that as we have had previously 2 times, we're having another drawdown here in ETH's price. But so far, we have continued to maintain the trend we started back here in June of higher lows, right, in price, and generally still testing either at the similar range or higher ranges. And this is indicative here of confidence in the market. Now, that being realized, we have had a pretty solid correction here. And it's coming towards a very fragile point Whereas if we break below these potential 3 trend lines, again, this is where TA can be quite subjective, and it's why I've put up 3 of the probably prominent trend lines people are watching. If we break below this range that we have here on the chart, which is somewhere around pretty much, I think the worst case scenario is 0.06 on the ETH to BTC ratio. We're currently at 0.066. All right. If we get generally about another 10% decline against that ratio, this could be a telltale sign that the market is ready for a longer drawdown. And I'll say that as someone who's invested in Ethereum, I'm just like any other strategic or institutional investor out there. I'm not married to Ethereum at the end of the day. I'm not married to crypto markets because I love crypto at the end of the day. I love what it stands for and the potential behind it. And I think over the next decade, it's got the most potential to disrupt the world in hopefully very positive ways. That being said, I'm going to be telling it to you guys straight here. If we do really get a decline below that range, that can be a really big warning sign for prices because it not only breaks this line of confidence, which we'd really like to see be held here, but on top of that, it's not able to find these potential lower support ranges where you have a little bit more leeway for corrections in price. All right. So that's just something important to keep in mind here when we're analyzing Ethereum. But I want to go ahead and take a look at something else here. I want to dive in to the situation in commodity markets because what we're seeing right now has got a lot of people spooked. Now, if you guys will remember a little while ago, I shared a really important chart with you all, which is that inflation, I'll actually go ahead and get it pulled up here so you guys can see it. Inflation in the economy can last in upper single digit to double digit territory for much longer than people think. People were saying, oh, inflation's transitory, or that's what Jay Powell's been saying. And then you even have a lot of Fed skeptics or Federal Reserve skeptics who are saying, yeah, inflation's going to go down, right? This is just a mere issue of supply chain logistics, or, for example, just a short-term spook. And all the while, I think that some of the momentum we're seeing here could be very short-term. I want to go ahead and explain something very important to understand. And this is the chart you need to see here. This is a chart from eCoin Metrics that we've talked about here, mapping over from the start of January 2020 to where we are now. This is back in February, but not too long ago. The map out of how inflation, annualized inflation rate, has been continuing to increase, mapped out against 1972. I want to make it very clear, guys. I don't mean it in a mean way to sound overly confident or egotistical, but anyone who is telling you that this is transitory, that this is short term, that this can't go on longer or much longer, they honestly do not understand the previous history of inflation, at least especially the relevant or relative history that we've had with inflation. There is still persisting issues in the global supply chain, still to this day. There is still continued pickup in geopolitical tensions between Russia and Ukraine. It's not slowing down as quickly as we would have liked. An important thing that we need to understand here is the ramifications of these elements, right? Not only obviously the global supply chain issues, which were built to a T over the past decade as globalization got bigger and bigger from the range of kind of 2008 to 2020. But on top of that as well, the fact that there are so many commodities, important commodities in the economy, like wheat and natural gas and oil and various other commodities that we can think of, that a lot of which comes from countries like Ukraine or Russia. And that puts a lot of geopolitical imbalance on the supply chain, or the supply versus the demand of these core commodities in the economy. So, right, and I'm not an expert by any means. I don't want to claim to be, but take a look at the prices here, guys. And this is something we wrote about in the Dash report if you guys are interested in getting this kind of macro coverage. We also cover crypto, but we also cover the broader markets. So if you guys are interested, you guys can take a look at the Dash report down below in the description. There's a link to it, and you can sign up on an annualized basis for, I think that's a 20% discount. But this is one of the charts we had here talking about how oil, right, escaping out of the descending wedge here, was not only able to come up, but it was able to make a key range of previous resistance, new support, and it's just been springing up ever since month over month, with this month being a 28% increase, a 28% increase in price. It was trending all the way up to 130 here just a couple hours ago. But there's serious fear here in the sense that, there could be some friction in the production of oil across the world, in the sense of getting more supply to the economy. And again, we've been watching these charts for a long time, and now we're basically up to a point we haven't seen since April of 2008. Now, I do want to emphasize one thing, and I'll talk about this as we go throughout the charts here, which is that I'm not saying this is a moment to go long oil or other commodities. I'm not saying it's a time to absolutely panic and sell everything so you can cover against the cost of goods and services, or start to stock up barrels of oil in your home. That's not a smart idea. It's a lot more expensive and tedious to keep commodities in a fresh state than people think, rather than just stocking up barrels. But my major point here is this, right? Is that this is not per se a time to panic, but we need to see here what's going to happen over the next coming weeks, because this could get progressively worse. We've got nickel as well, which has just picked up a parabolic trend. It looks like Bitcoin right now, which had been slowly edging up here. And again, a great lesson here of what we've talked about, of generally higher lows in price, right? Not always, sometimes coming down to a similar support range, but never really breaking down to new relative lows, right? And on top of that, maintaining consecutively generally higher highs in price. And when you see that previous resistance range gets broken and is turned into support, that's your telltale sign that things are about to rip higher, that the market is feeling FOMO. And just in the past 24 hours, nickel spot prices are up 28.5%. Lumber prices, let's take a look at lumber here, right? And not even a per se, kind of a more speculative geopolitical tied commodity, right? Lumber's across the world. There's a bountiful supply of it. Unfortunately, though, there's still been persistent supply chain issues on lumber production, counter to the demand in the housing market and various other sectors. And it's still riding up just shy of where we were during the pandemic highs back in May of 2021, right? We haven't been up to this range since back here in May of 2021. This is really genuinely concerning stuff. Let's take a look at wheat futures. Wheat up 31.8% in the past week. If we want to take a look in the past 24 hours, up another 7%, but this has just been an absolute tear higher. And again, taking a look at that longer term trend, we had all the signs here that a breakout was coming. It was higher general lows, higher general highs, or consistent highs. This is indicative of confidence in price, or in this case, if you will, scarcity on the market. Now, I want to go ahead and take a look again at another chart we talked about in the Dash report, which was this idea of, again, not just the descending wedge in oil, but the general descending wedge in the S&P 5 or the S&P Goldman Sachs Commodity Index, or SPGSCI. You guys can find this on TradingView. It's a free and accessible indicator, but we try to do a lot of in-depth technical analysis on this to really understand what's going on in the commodity markets. Are there investment opportunities? And also on top of that, are there areas of time where we might be at a concerning point in markets? And again, we'd basically been pointing out here that it had, just like with oil, come up, turned this range as a support, and it's now sprung higher, up 46% over the past quarter, All right. If we want to take it here to the monthly, just so you can kind of dive into it a bit deeper, right? Most of that momentum has been coming in here since the start of March. We're only 7 days into the month, and it's been the biggest single month move here we've seen in commodities in the past, I'd say, probably actually since we started this cycle, even coming off the bottom of oil. So this is a really significant thing. Now, what you want to hope and pray for, you really want to hope and pray for here within the markets is this, that we could come up to this range across most commodities, that the scare starts to end, we start to get more supply in the market as the cost of goods or commodities are starting to go higher in the market, therefore incentivizing some degrees of production, governments starting to lax regulations, especially in the United States and other jurisdictions, to build domestic production of oil and natural gas, right? At this point, guys, to be completely honest, and you find this even with a lot of environmental supporters, it is strategically beneficial for us to basically produce these commodities, because no matter what, everyone's still driving cars, everyone's still doing X, Y, and Z that has an effect on the environment. it's good to domestically produce so that you can have that degree of energy independence and prices can be at least moderate to some degree and not starve everyone of their wealth. But putting that aside, right, we need to have those efforts made in order to produce more supply. And if that happens, you can hope that maybe on these indicators that we see a top around this range. But I'm going to go ahead and let you all know about a little secret that most people aren't looking at. They may be watching the individual commodities. They may be watching these indicators here, these indices that measure the broad range of commodities as a whole. But I'm going to go ahead and let you in on a little unfortunate secret. And that is that same index, the GSCI, right? The Global Commodities Index, or Goldman Sachs Commodities Index, divided by the M2 money supply. Now we're going to dive back into the chart in a moment, but what do I mean by this? Why is this so significant? This is dividing the broader performance of commodities by the money supply. Now, the good news here is that we see a general downtrend. It gets cheaper over time to produce commodities. As the world is globalized, as technology has improved, generally, one of the best outcomes of all of this is that commodities have gotten cheaper over time. And that's great, right? Who doesn't want cheaper food in this case? Who doesn't want more accessible technology and access to important commodities that improve our lives, right? So that's the good news. That's the really great news on the macro trend. The bad news in the short term is that divided by the money supply, we can see here that we're still quite cheap, right? We're back where we were generally if you divide by the money supply here at the bottom of where commodities stood against the money supply in 2008 and 2009 at the start of the year. We're at the same range here in the early part of the start of the 21st century, right? Even here in the late 90s, right? Commodities have been way more expensive in the past. And I want to go ahead and talk about two potential scenarios here. Now, we don't know exactly what price it's going to go to. I don't want to claim here to say that I know the absolute end-all be-all answer, but I want to give you guys two kind of example models to look for, okay? The more likely model that I think is going to play out is us coming up around 95 to 100% from where we are going into 2023 and 2024. Coming up here against the trend line that we have. We're basically generating that from the previous peak here in the 80s. Commodities were at a really heightened point. And on top of that as well here in 2008. We've also got our baseline here, right? We came below this range here in January 2020, right? And oil collapsing in price pretty much helped us get there, right? That was by March when oil had gone and started trading into negative territory. I think what we have is a chance here to come up here and do pretty much a 100% move in commodities, which is going to lead inflation rates to double-digit territory. I think that is inevitable at this point, so long as there isn't some immense de-escalation and immense efforts by various governments across the world to bring down those costs of goods and services. And I just genuinely, to be more conservative, I'm going to think about the worst outcome, right? And I think that that's more likely than not going to happen. All right. Now, I do want to talk about one other potential scenario because we've been talking about this kind of descending wedge trend here in commodities, right? When we were looking at the SP GSCI here, right? Lower highs, lower highs, lower lows, but the highs are dropping at a faster rate and the lows are dropping at a slower rate. This is indicative of a uptrend in the coming future, and that's exactly what we're seeing playing out here. What I'm a bit worried about is if we come up to these highs and are not able to cool things down, we get above that range, turn it into support, and then we start trending higher. Those are some dark times ahead. And that's where I would be incredibly concerned for crypto and for the broader markets. So if you take away what we're talking about here in this video, if you want some kind of summarization of my thoughts, because I know I threw a lot at you guys today, as I do. I'm a rambler. But the key point is this. I think generally speaking, we need to accept that commodities are going to continue climbing higher. In the short term, I don't think it's a concern for crypto markets because I think crypto is going to be a continuous desired hedge for people. It's become more familiar, and I think that it's going to help people in the short term to hedge against these kind of inflationary pressures in the economy. As people's purchasing powers decline, people are going to look for something that can help save them, especially while it's at a discount range like this. And I don't think even like a 50, 100% move in commodities over the next year and a half or two is going to despair people from investing in crypto. But if we get this scenario where we break above here, and I'll just go ahead and kind of draw it out here, right? If we trend higher, make this support, that's where I would be concerned for crypto. If this happens here, and that would be your quick exit point for crypto, if you will. I think your telltale sign that it's time to pack up shop and to look for more traditional commodities, or getting actual exposure to commodities through futures, through all types of other investments. And it may not be for that long, but that's where I would think that it's pretty rational to do. And this is why, again, all the while, guys, there's a lot of great crypto YouTubers out there, a lot of great crypto personalities. I really try to approach things from a macro view, because crypto does win a lot of the time, but there are also periods of time where there are other better asset classes, and some in which will be imperative to protecting your wealth. The last thing I want is hyperinflation stealing the purchasing power that many of you have probably worked so hard to build up, working your jobs, starting your own businesses, working hard to be productive and beneficial to society, right? It's one of the worst things. It's one of the worst taxes that can be hit upon you as an individual. So that all being realized, I wanted to emphasize one key thing here that also is important to note when it comes to cryptocurrencies like Ethereum or Bitcoin. As we are coming up here towards March and April, it is tax season. And one thing I would like to let you guys know about through today's sponsor, TaxBit, is that utilizing proper tax software for your cryptocurrencies can be imperative towards making sure that you don't overpay. And on top of that as well, can help you to write off any potential losses that you might have had. If you made some bad trades, it's important to recognize those losses in the United States so you can lower your tax obligation legally. This is all in compliance to the standards by the IRS. And the TaxBit is one of the leading tools out there in the crypto market. I've been a big supporter of them. They've been a partner here on the channel for the past couple of years. And if you guys are interested, you can not only always check out the link in the description to get a discount on tax, but if you're already sold on getting an account to plug in all your different crypto wallets and exchanges. But on top of that as well, we've got a Google form down below in the description. It should be the top link that will allow you to enter into a competition to be able to win one of a few different select TaxBit packages for free. So if you guys are in a rush to get TaxBit, you can already go ahead and sign up for it. But on top of that as well, if you want to enter in for a free chance to win, you can put your email and name down below into the Google form and enter in for a chance to win a package from TaxBit. That being said, everyone, thank you all so much for watching today's video. I hope this provided some solace in this pretty crazy time across the world. Again, I think we can only hope that things are going to get better sooner rather than later, but you have to prepare. You have to prepare yourself. And that's exactly why we've been preaching crypto since back in, since 2017, but really heavily here since 2020, during this period of massive money printing, the economy, the global supply chain getting disrupted by the pandemic. It's been a really solid hedge for a lot of people. And I think it's going to continue to be so long as things don't get way out of control. But we'll have to see how things play out. No one really knows the future. Anyone who claims to tell you so, well, take their opinion with a grain of salt. At least we are honest with ourselves here on the channel that there are some things we can roughly predict, but there are many things as well that are just purely unknown. And the sooner we can realize that and have ourselves protected for the if case and then preparation phase, then we should be much better. If you like this video, consider dropping a like, consider subscribing and hitting that bell icon if you haven't already. It's a great way to support the channel. Make sure that you don't miss out on another upload here on the channel. But above all, everyone, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.